Hi guys, welcome back to my channel. Kelvin here. If you are investing in the stock market, I'm pretty sure that your portfolio will look like it's dressed up for Chinese New Year. I know because I keep getting questions asking what should you do? Should you sell? Should you wait before investing? And meanwhile, I'm trying to reply, this is fine, while the entire room is on fire. I know how scary this may all seem, and some of you who bought into GameStop, Nokia, BlackBerry, AMC will be like, first time? Many high-flying stocks in 2020 are singing Justin Bieber's baby song.
Going down, 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 down.
And totally wiping out all of the gains in 2021, which makes all of us sad. So in this video, I'll explain why the stock market is crashing. Is it the beginning of another bear market? And what am I planning to do? So without further ado, let's start. To tell the truth, many people have seen this crash coming a mile away. And I'm not talking about those kind of doomsday analysts who shouts that the market is crashing every other day. And after 100 years, the market really crashed and they be like, see, I'm right. I'm talking about real pro analysts like Cathy Woods who predicted that the crash will happen sometime this year. Here's what she said.
I'm sure we're going to go through a doozy of a correction this year at some point. I don't know when and I don't know why, but I do know it never hurts to take profits and to keep some powder dry so that you have the psychological wherewithal when the world seems to be falling apart to pick up on bargain basement prices, like the ones we got during the coronavirus.
And yes, our Khaleesi is right so far. There's been a lot of repricing or correction happening in the past 2 weeks, specifically on growth stocks like Tesla, NIO, Lemonade, where they were going to the moon in 2020. So what triggered the crash? A simple word, fear. But this fear is a little funny because it's fear of something harmless, which is the fear of economy recovering. Here's why. You see, in 2020, when the pandemic came along, economies all around the world were forced to shut down. To counter this, the Fed has turned on the money printer in order to stimulate the economy and has announced that they will keep the interest rate close to zero. As you can see from this chart, the 30-year fixed rate mortgage average has been steadily going down in 2020. Then all of a sudden it spiked, and at the same time, the 10-year break-even inflation rate was low in the entire 2020. Then in 2021, it went past the average 2%. Which is actually a normal thing because we were measuring inflation from the bottom of the market. Meanwhile, people were finally going back to work, with the latest job data showing job growth surging past estimates. What does this all mean? With inflation recovering and unemployment rate going back down, it just means that the economy is recovering. Then you may ask, but why the market is crashing? That's because when interest rates are low, the cost of borrowing is very cheap. And that's what everyone thinks in 2020. So they invested heavily into growth stocks, causing them to go to the moon like nobody business. Then 2021 came along and showed that the interest rate is going back up, which meant that the cost of borrowing will be higher, which will eat away at the company's profits. All of a sudden, everyone realized that, then that means this Tesla stock is overpriced there. Sell which caused the stock market to laosai like nobody business. Even though Jerome Powell came out and said that the inflation will be temporary and they don't plan to increase the rates anytime soon, he tried to calm everyone down, which obviously didn't work because the market is still going down as of Friday. So if the market's going down, where are all the money going to? Bitcoin? Hehehe. Just kidding, the money is just flowing from growth stocks into value stocks. Stocks which people think will benefit from the economy reopening. Stocks like General Electric, which has gone up over 5% this past week, or like Bank of America, which has gone up 3%. They'll be like, what is market crash? Can eat one? By the way, the term for this is the Great Rotation, where investors rotate their money from growth stocks, which benefited from low interest rates, into value stocks, which will benefit from the economy reopening. What I'm trying to say is, this crash wasn't caused by scary stuff like the 1930 Great Depression, or the 1998 dot-com bubble, or the 2000 financial crisis, or the 2020 pandemic. This crash was just caused by something good, which is the economy reopening. So don't get scared lah. Personally, I do not see anything wrong with this crash, as there's totally nothing to be worried about. Even though my Tesla has gone down like 30% since the beginning of 2021. If anything, this is just another Shopee sale, but without Ronaldo and Portugal doing weird dances. To tell you the truth, I'm really happy that this crash is finally happening. In 2020, when everything kept going up and whatever I want to buy keep becoming more and more expensive. Now, with the crash finally here, I get to buy the stocks that I want to buy at a super cheap price. I'll be like, Chiong and start using my reserves to add on. I know how it feels when you are buying the dip and the dip gets much deeper, and it may seem that this could get much worse. So to those asking, should I sell? In the immortal words of my senpai, Chicken Genius,
don't be a...
If you see nothing wrong with the stock, just activate your diamond hands and hold. Eventually, it will recover, provided it's a good stock lah, of course. Then I know some of you will be like, let me time this dip, I'll buy right at the bottom. I'm not so sure about you, but I can't even time simple stance in LOL, let alone timing something as complicated as a stock market. I'm sure a lot of people try to time the market in 2020. They waited for April, May, June, look back and be like, "Ayya, I should have bought in March." If you are one of them, here's an advice.
Stop it. Get some help.
So here's my strategy to time the market. Identify your highest commission stocks. It can be Google, Amazon, Tesla or whatever. Then for every 5 to 10% drop, just buy in. That way, you get to average out your price. Yes, I know you are not a rich Saudi prince and can buy one Google stock every time. But don't worry, here's where interactive brokers comes useful, because it allows you to buy fractional shares. For example, you can just buy $100 worth of Google stocks whenever you want. If you want to sign up to interactive brokers, you can use my link down below. I plan to just keep buying and buying so that when the market finally comes back up, and trust me, it always will, because stonks. Just kidding, not because stonks, because the economy is recovering. I will have bought in at the best possible price and will be one step closer to financial freedom. And that's all for today. Let me know down in the comments below, how are you handling this crash? Like, share and subscribe, as I'll be posting new videos every Monday and sometimes Friday.